CMHC, or the Canadian Mortgage and Housing Corporation, just came out with a very damning report on the Canadian economy and the real estate market. They're projecting anywhere from 9 to 18% declines in real estate prices across Canada. So does that mean the Canadian real estate market is now headed for a crash? Is the writing on the wall? The bubble is about to pop? What about if CMHC can't even cover all these mortgage insurance claims? Would CMHC fail? I've got a whole news report here. We're going to go through it all on this episode of Bald Prairie Real Estate. Hey everyone, welcome back to Bald Prairie Real Estate. My name is Matthew Pfeiffer. I'm a real estate agent in Regina, Saskatchewan. If you enjoy being kept up to date on the Canadian real estate market, anything that's going on, even some little tips and tricks, go ahead and hit that like and subscribe button right now. I really appreciate everybody's support so far. So the other day I was watching Sesame Street with my nephew, and we're watching Bert and Ernie. And Bert says to Ernie, "Hey, would you like some ice cream?" Ernie responds, "Sure, Bert." Just the other day, CMHC put out its forecast for the Canadian real estate market for the next 12 months, and it's pretty significant. I do want to preface, though, that this wasn't actually a full report. They didn't have data that we could go through. It was just a speech to the Parliament. It was actually a parliamentary committee that they were talking to and kind of what their thoughts and projections are. Now, the big news, of course, that's getting all the headlines is they're projecting real estate prices to fall anywhere from 9 to 18% in the next 12 months in Canada. And that's getting a lot of headlines. That's significant. But there's two more points in there, two sentences that I'm actually more focused on than that. And that is that they're saying that household debt is going to cross 200%. We're in Canada right now where we have some of the most indebted households, and it's going to continue to increase. I don't think anybody didn't think that was going to happen, but for people to have to owe $2 for every dollar that they make, that's a very significant milestone. And then the other thing in here, kind of near the end of that speech, they're saying that yes, CMHC will continue to step in and fill those insurance claims, but that their help is not unlimited. So that has me nervous there. Does that mean they're not going to be able to cover all of those insurance claims as defaults come up for mortgages? And the last sentence was that they may have to reevaluate their lending practices. So this has got a lot of people understandably nervous, myself included. I don't think anybody who read that report wasn't a little bit concerned. There's a front page of Financial Post that got splashed all over headlines. CMHC predicts 9 to 18% in decline in real estate prices. I'd actually just posted my video on whether you should buy a house or not right now. So if you want my full thoughts on that, you can check that out right there. Of course, I got a lot of comments on saying, well, CMHC is projecting prices to go down. How can you say somebody should or shouldn't buy a house right now? So got a lot of flack in the comments. And I still hold by those statements in that video. So you can hold off on the angry comments. Go ahead, watch that video. You can see why I'm thinking you should or should not buy. There's a whole bunch of situations why you'd want to buy and a whole bunch of situations why you shouldn't buy right now. So you can go ahead, watch that and kind of see where you would fit in that category. But it's significant here. This is not a small amount of money that they're talking about here, this decline. But I do want to take a quick step back here. I'm going to post a chart here. It's going to play through as I'm talking. And I've been collecting reports from different economists, banks, real estate companies, all that type of stuff on their thoughts of where the Canadian real estate market is going. So if you go through the chart, you're going to see a massive spread here in terms of what people are predicting. Anywhere from TD Bank saying that they were expecting prices to go up 6% this year to Moody's saying a 30% drop. And that spread is massive. I mean, we're talking almost 40% difference in what their projections are. Somebody's got to be wrong here. And these came out, some of them as early as about mid-April and some of them just recently. But even the ones that are older, they still haven't had updated reports out. So they're still standing by those existing statements, or at least maybe not pushing them as much anymore. But what the heck does that mean? Well, I think right now, nobody knows what the heck is going on because these forecasts are so wildly different and the methodology and the reasons behind them are so dramatically different. So we've got reports, from 6% up to 30% down. Somebody's got to be wrong. I think we're going to find out fairly soon which one of those is wrong. What has me worried more than anything else, and I know you're probably saying, well, geez, aren't you worried about that 9 to 18% decline in real estate prices? Yes, I am. Of course, I'm going to be concerned about that. But CMHC's mandate is to assist Canadians in buying homes. They want to have as many homes as affordable for Canadians as possible. So when they're talking about having to change their lending practices or potentially not being able to back in some of those insurance claims, that has me very concerned. For those of you who don't know, CMHC was created in 1946, And ever since then, they've been insuring mortgages for Canadians that have less than 20% down. So those are called high ratio mortgages. And by insuring those mortgages, backing them through the government, banks are more willing to allow Canadians to buy houses with smaller down payments. This has allowed Canadians to have one of the highest rates of home ownership in the world. Why now would CMHC have to be reconsidering their lending practices or their ability to cover all of those mortgage insurance premiums if there's a bunch of defaults? That seems a little worrying when they're saying their help is not unlimited. The insurance programs that have been put in place by CMHC were paid for by homeowners, and the money should be there specifically for reasons like this when we have a potentially significant impact on the Canadian real estate market. But a little known fact is that since 2015, the federal government has been using CMHC as a giant piggy bank. They've been pulling out billions, and I mean billions with a B, worth of money out of CMHC. They've decided that they needed extra funds and they pulled that money out of CMHC. This was money that was paid into CMHC by homeowners, many of them first-time buyers, just getting into their first home for exactly this reason. If there was a situation where a bunch of mortgages were defaulted on, the money was there to back end those mortgages and pay out those insurance claims. But CMHC appears no longer to have the same cash reserves as it once did because the federal government's been pulling so much money out of it. If you've been looking at stats like unemployment rate, insurance premiums, mortgage arrears, those mortgage deferral rates, bankruptcies, and you're worried about that, the CMHC report should be even more worrying for you because CMHC has been kind of the underpin of the Canadian real estate market for decades. And now all of a sudden, the government's recklessness and pulling that money out of there maybe come back to bite them in the butt a little bit here. Right now, if you're buying a house and you're putting 5% down, your mortgage insurance premium through CMHC is 4%. So CMHC doesn't have a lot more room where they can raise those rates to cover their liabilities right now to the point where there may not be any equity left in the house because you can't get much higher than they are right now. So the government's going to be forced to either have CMHC not be able to fulfill its mandate anymore, or they're going to have to pump billions of dollars back into CMHC. I think you and I both know which direction they're going to go. They're not going to let CMHC be unable to fulfill its mandate, so they're going to have to pump billions of dollars back into CMHC, money that they took out, money that was put in there by homeowners for this exact situation. Now it's got to get put back. Somebody's got to pay for it somewhere. Okay, so I hope this doesn't have you all freaked out right now. As a lot of you know, I'm more of a half glass full type of guy. So what do I think of the CMHC report? Well, kind of like I've been saying for a while, patience is a blessing here. You look at these reports and the projections are all over the place. So people that are very smart, very educated, that do this for a living, they're unsure of where the heck this is going to go. So let's hold tight right now and kind of give it some time to see where this is going to go. I think patience will be much more beneficial than panic buying and selling will be. If you want kind of my thoughts on where the Canadian real estate market is in terms of most recent update, I've got a market update right here so you can kind of check in and see what's been going on the last little bit. If you're a first-time home buyer, you're probably a little bit nervous right now, not sure if this is the time you should buy a house in Canada. Well, I've got a whole series of videos. I'm going to put them up right here that specifically cater to first-time home buyers. Thanks very much for watching, everybody.